Mentioned. These are our broad topics. First one is the contractors enhancing, creating damage that did not exist. Um, and we've seen an uptick in cases like this. Rich Nelke is going to be giving you kind of a case study of a case he actually handled for a company, um, and how they investigated, how they handled it, and obviously we're telling the story because it was a very good success for the company, um, and has deterred future claims. Increased involvement of contractors and claims, including contractors possibly acting like public adjusters. So I know, many of you know, I sometimes me or other individuals in my office may go out to a fire scene. 10 years ago, when we're at the fire scene for cause and origin and subrogation investigation, it would be mentioned public adjusters fighting over trying to get the account to sign the insured up. Now in the street, within 24 hours of the fire, it's the contractors that we're seeing quite a bit, and almost fisticuffs because they're trying to get, I already got this home, get away, things like that. So they're more and more involved. A little sidebar. I think this has been growing, and I can't pinpoint it, but I'm kind of thinking Superstorm Sandy might be the initial reason. Because Superstorm Sandy, we never really had these storm chasers that we've seen in Florida, Texas, the Gulf states, and things like that. They kind of came up here. They thought they were going to teach us something with Sandy. I like to say that we taught them, those out-of-state attorneys and public adjusters, something, because all in all, those Sandy claims were successfully resolved. Most of them were dismissed or what have you. But I think the public adjusters, maybe they went back to Florida, but they may have still have their eye on this place. Like restoration companies may have gone back to Florida or Texas, but they still have their eye on New Jersey. So we're seeing more and more of these restoration companies and public adjusters from out of state. Sandy, is she to blame? I don't know, but it seems like that was really the start of it. Dealing with difficult contractors and restoration companies when they try to control the claims process, as well as when they are aggressive in their initial restoration work or remediation. And the last topic we're going to cover today, because I get this question almost once a week, increased frequency of assignment of benefits with contractors and restoration companies, and the enforceability of it. Is it enforceable, and to what extent, and how to handle these types of scenarios. So that's the overview of our topics. Rich is going to start off with the contractors enhancing, creating damage that did not exist in his case study, and I'll leave it to you, Rich.
Thank you. Thank you, everyone, for attending today's webinar. And as Matt said, I'm going to get into the issues of enhanced claims involving damages that may not have been there. What we see oftentimes is after a big storm, windstorm, hailstorm, contractors coming into neighborhoods, going door to door, knocking on doors, leaving pamphlets on homeowners' doors, looking to do a free inspection. Sometimes it's from fallen trees, sometimes it's due to hail bursts, but oftentimes it's in relation to a big storm that came through a neighborhood, and the contractors, the storm chasing contractors, are there ready to drum up business. Now, what the carrier has to look out for is, in the situation, most times the homeowners are innocent, is what we've seen, and they're unsuspecting to what the true intention of these contractors are. So there might be a storm, the contractor knocks on a door, leaves a pamphlet, the homeowner might see a shingle or some minor damage, and calls the unsuspecting homeowner, calls the contractor. Contractor comes out and offers to do a free inspection. At that point, the homeowner has a legitimate belief that they're having a legitimate contractor inspect their roof for a free appraisal. Most oftentimes, the homeowner does not go up on the roof. The homeowner doesn't even stay outside and watch the contractor. The contractor goes up on the roof with free access to do what he or she would like to do on that roof. Now, at that point in time, there may have been some legitimate wind damage or hail damage. So we're going to talk about how we determine what's true caused damage from a storm, as opposed to intentional or mechanical or vandalism damage from a contractor. Now, when the carrier gets the claim, it's crucial to get an inspection as soon as possible. One is to allow the contractor to see, allow the adjuster to see the home right after the claim is reported, before any evidence of the storm or any evidence of what the contractor did disappears. When there is no thought that the homeowner is involved in what has taken place, what we've seen is the carriers pay the homeowner for the damage and then file subrogation actions against the contractor who has been involved in creating the damage. Now, in filing subrogation actions in New Jersey, we have a great weapon we have a great weapon, which is the New Jersey Insurance Prevention Act. It's NJSA 17:33A-2. And as you can see on the screen, the purpose of the New Jersey Insurance Fraud Prevention Act is to confront aggressively the problem of insurance fraud in New Jersey by facilitating the detection of insurance fraud, eliminating the occurrence, and requiring restitution. Restitution is where we are bringing actions against these contractors. Now, under the Insurance Fraud Prevention Act, any person who presents, causes to be presented, or prepares any written or oral statement could be found in violation of the Act. Now, what does that mean? Oral or written statement, causes to be presented. So we have contractors who may tell the homeowner about the entire roof being damaged from the storm when there's only a portion that's been damaged from the storm. That's causing to be presented a false statement in violation of the Act pursuant to an insurance claim. We have contractors who have actually presented the claims to insurance companies on behalf of the homeowners. They are making the oral statements, the false oral statements, in pursuit of this claim. In terms of presenting a written statement, sometimes the contractors are presenting estimates or reports, proposals, all seeking payment for replacing the entire roof, when either the entire roof was not damaged at all, or there was minor damage from wind, and the rest of the damage was from the contractor intentionally damaging the roof. Now, one of the key impacts of the Insurance Fraud Prevention Act is that a successful claimant, such as the carrier, is entitled to treble damages. Obviously, treble damages would be the damages times 3, which acts as a huge deterrent for engaging in this type of activity. Now, how do we start to determine whether or not the claim submitted is actually one in which is a legitimate claim, or one in which it is a contractor creating intentional man-made damage? One thing to do is we start with the date the claim was reported and look at weather reports. The weather reports will reveal whether or not there was a major storm at that time. Was there a major windstorm? Was there a major hailstorm? The miles per hour that we see generally from reports from engineers will dictate whether or not the wind could have even impacted the roof to cause damage, depending on the age of the roof. So doing some background research using weather reports is a first step. Additionally, having the adjuster or the carrier's contractor out there to inspect the roof, the inspection itself will start to dictate whether or not the damage appears to be intentional versus actually caused by wind. Because in regard to the wind causing the damage to the roof, wind patterns will dictate where and how the damage occurs. And when we see intentional or man-made damage, often it's various spots of the roof that don't follow any pattern, don't follow any rhyme or reason. And that's typical what we see when it's contractor intentionally causing the damage. Additionally, the way the wind impacts the roof and causes damage is also looked at as another factor to determine whether or not it's a contractor pulling up on shingles or ripping shingles out, as opposed to the wind actually causing naturally occurring damage. Now, video surveillance goes a long way in terms of these types of claims when it comes to proving the claims. Many houses now have Ring cameras, so having the adjuster out there to investigate the claim, knocking on doors and asking neighbors, doing neighborhood canvasses to look at their Ring videos is one way that we've had carriers prove whether or not the damage was intentionally caused. Another is when we see the same contractors over and over engaging in this type, is keeping that in the back of our mind. Another is when we see the same date of loss popping up over and over and over in the claims that have been submitted. So as you can see, this is not a one-stop shop where it's one thing that carriers are resorting to determine whether or not this is intentionally caused or winds, naturally occurring wind damage. It's a group of factors that have to be examined at the start and as the investigation continues. Now I'm going to take you through a case study that we had where from the very beginning there was a question as to whether or not the damage was intentional versus wind related. And we talked about video. Lucky enough, because this specific claim involved a contractor who kept popping up, the carrier had an investigator in the neighborhood. And what happened was the investigator saw a roofer from this particular company on the roof with a crowbar pulling up on the shingles. So the carrier was lucky enough to obtain key video footage demonstrating that this contractor was actually ripping up the shingles. The contractor, unbeknownst to him, laid out the case. At that point, the determination by the carrier was that there was obviously intentional damage, and the carrier paid the claim under the vandalism portion of the policy. Now, this was a case where there was some minor wind damage, and the majority of the damage found was man-made. So the carrier paid for the damages under two different portions of the policy. They paid for the wind damage under wind coverage. They also paid for the man-made damage under the vandalism coverage. From that point, a subrogation action was brought against the contractor, naming the contractor and the workers involved. Rather than engage in long, protracted litigation with discovery in the form of interrogatories or demands for documents or requests for admissions or depositions, what we did was we immediately, before preparing or engaging in any of that discovery, we took the video and we served it on the defendant, the contractor. We received an immediate phone call from the contractor's attorney who wanted to come to the table and settle. He understood that this was a major problem for his client. His client was caught in the act. From that point, we negotiated a very, very favorable settlement on behalf of the carrier. Now, not only did that case result in an extremely favorable conclusion for the insured, because their roof was their damage was paid. It resulted in a positive conclusion for the carrier because they got the money back essentially from the contractor. But it also acted as a deterrent, because as we went on, that same contractor was involved in many other claims with that same carrier. It just so happened that in those other claims, there was no video. There was no hammer that we could use. However, in those other cases, we obtained engineers, we retained engineers who went out and inspected the roofs. And in all of those roofs involving that contractor, the engineers provided strong expert reports detailing the damages they found and why they were the result of man-made activity rather than wind-caused damage. In all those cases, even without the presence of video surveillance of the contractor engaging in the activity, all of the cases settled, and the carrier at this point hasn't seen any more claims filed involving that particular contractor. So actively and aggressively combating these claims will act as a deterrent, as the carriers have seen that the structure put in place will impact these contractors not seeking to engage in any of this activity with those particular policies on those homes. Now, I think so.
Yeah, back to me. Okay. So now we're going to talk a little bit more about like handling these claims with difficult contractors and public adjusters. So this is one thing I always say, publish or perish. Okay. Respond to every letter, respond to every email, build a record with the caveat. I've seen many letters from contractors or public adjusters, or maybe even insureds, where it's like War and Peace. It's paragraph after paragraph, and every other sentence the public adjuster uses the word bad faith, and it's tempting to do a line by line response to that email. My suggestion is you publish and respond to that email, but you don't take that bait and you don't go line by line. You state your facts, you state your reasons why you adjusted the loss. You say, I disagree with allegations of any kind of bad faith. Have a nice day. So I think when you are responding to these emails, you should make sure that you actually are documenting your position, but I would not go into a long-winded email response. God forbid that case goes into litigation. You could have a scenario where that email is put in front of you and you're asked, why did you say this and why did you say that? And it just gives them perhaps more to chew on, so to speak. So publish or perish, but do it smart. Use your policy, obviously. That's a big thing too. You know, I know every time someone asks me about a coverage question, I kind of say, hold on a second, and like get the policy out, because even though I know most of those policies pretty well, it's kind of hard to really by memory just be able to say this policy provision applies. Same would be for the scenario where you're communicating with an insured or public adjuster, and you're dealing with the policy provisions. What policy provisions are we talking about? Right to inspect property. They have to provide proof of loss. They have to provide an inventory. Is there an examination under oath or anything else that you want to be doing there? So again, use your policy and memorialize your policy provisions in your communication with whoever you're responding to as well. So now we're seeing this quite a bit, whether the representative of the insured, let's call it contractor, restoration company, whatever it is, are trying to kind of act like a public adjuster. I mean, I'm not sure if everyone's aware of it. There's actually a site, I think Dobie has it, where you can actually look up the name of the public adjuster to see if they have a valid license. I would suggest you do that, because that's the ability to say, we cannot deal with you because you don't have a valid public adjuster's license. It's the person and the company both must have a valid public adjuster's license, not just the company. Obviously, correct inaccurate statements by the insured and public adjusters. This is part of your publish or perish. You want to make sure you're telling them, no, our inspector was there on that day, and explain the facts that they may have stated incorrectly. You know, the other thing that kind of goes into this, you know, I'll talk about 5 seconds, very shortly, the Unfair Claims and Selling Practices Act, right? We all love hearing that word. It's the rules and regulations for reasonably handling claims with insurers and claimants. And it's really hasn't been updated in quite some time. And it actually says you've got 10 days from the note. I think it's 7 or 10 days from the notice of the claim to acknowledge it and inspect. Well, this day and age, good luck with that, because you can't wait 7 or 10 days to write a letter. You can't wait 7 or 10 days to go out to the property and inspect it, because who knows what's going to happen. So the Unfair Claims Practices Act and all of its requirements hasn't really caught up with the times and how quickly things move. I mean, at this point in time, I know a lot of people email with the insured back and forth. It's not a written letter to the insured, and the insured writes a letter back. It's a lot of emails, it's a lot of phone calls. So be cognizant of your, documenting your file and everything else like that when you're dealing with, when you're going out there, when you're responding to these public adjusters. Building that record, because that public adjuster is probably trying to build that record against you as well. So when we talk about public adjusters in general or other representatives, there is the Public Adjusting Act. That act actually says who is a public adjuster and what they can and can't do. And then you have to be in a scenario where, am I dealing with a contractor who's trying to circumvent the Public Adjusting Act and is actually trying to act like a public adjuster? It can be in the appropriate situations to tell that contractor you are stepping outside the line. Now, the questions I get often are, well, what's the line? It's a hard line to really define, but I think you know it when you see it. In fact, some cases that, or maybe later on in the presentation, or maybe I didn't include them, but some cases talk about that if a contractor is acting like a public adjuster, his or her assignment contract is completely void. Actually, I'm going to grab that verbiage from that one case. I didn't disappear. Yeah, so there was a case where the court basically said the assignment and the contract are invalid because although the person claimed to be a restoration company, if you go to their website says how to make a claim, and they talk about how they advocate on behalf of the insured, how they negotiate with the insured. It was kind of like a 10-step process on their website. The court actually found that information on their website talking about a contractor, about presenting claims and dealing with the insurance company and how to present claims with the insurance company was clearly stepping over the line. You see stuff like that, it's obviously a contractor that's trying to act like a public adjuster. And who would think sometimes in this day and age, you might rather be dealing with a public adjuster than some of these contractors. Public adjusters have more rules and more regulations. They tend to charge less a percentage. There's a waiting or cooling off period from when the actual loss occurred. So there's a lot of stuff going on there when you're dealing with your public adjuster. Do they go outside the lines every now and again? I've seen it, but at least they do have a licensing process. If they violate the act, they can actually be suspended or revoked or have penalties and things like that. Actually, you know what? I'm going to read that too. Just so you know that our Department of Banking Insurance every now and again is going after public adjusters who are not doing a good job. These are published decisions. It's the Department of Banking versus Divini, where they said there was an agency decision by the New Jersey Department of Banking Insurance finding that the defendant violated the Public Adjusting Act based upon the services rendered and not having the proper 48-hour cooling off period. There's another one where Adobe went after construction investigation and adjustments. That was the Melman. Was it Melman? Hold on a second here. So it was a consulting company who was an unlicensed entity that was acting like a commissioner. The individual's name was Mamel. I think Ken Milley's on this, and I know Ken, you had some cases with that as well. Adobe looked into him, went after him, told him cease and desist. This is also public record with Adobe's information as to, and this is the list of all the public adjusters that they've gone after for going outside the lines and violating the Public Adjusting Act. So what is the difference? Contractor versus public adjuster. Public adjuster must be licensed in the state of Jersey, um, which also requires classes, requires continuing education, um, of that nature. The contractors are licensed to build, not to handle insurance claims. So when you talk about contractors that start crossing the line, it's when they start advocating really on behalf of that insured, and they start acting like a public adjuster. They start citing policy language, and they start trying to tell you, how this claim is going to go. Obviously, contractors have an interest in maximizing the recovery, whereas a public adjuster is typically ensuring the policy holder receives maximum benefits they're entitled to under the policy. So contractors, I think, in my experience, and this would be sometimes the entire contractor, or maybe just a roofing contractor or a restoration contractor, they're really worried about maximizing the remediation work that they did. Okay, they're worried about getting a big bill out as soon as possible. The other issue is the public adjuster is kind of usually two steps backwards and trying to say, okay, here's the whole claim and its totality, and how do I get it adjusted? And when the restoration companies come in, some issues, and insureds have said this to me specifically. We in this industry, we deal with losses, and we see them. We're kind of muted to them a little bit. But the insureds, even though minor water loss in the kitchen, for them is a big deal because maybe the first time they made an insurance claim, and lo and behold, someone comes in and has all this kind of documentation and paperwork and sign, and at the end of the day, when the dust settles and there's an estimate for $90,000 compared to our estimate for $6,000 for the remediation work, the insured says, now what? And the insured says, most often I find the insured is saying, I didn't know what happened. I was caught in the middle. He told me he'd take everything. He told me stories that the insurance companies are bad people and I'm going to protect you. And then I've seen scenarios where those cases obviously go south when there's a 1,000% increase of our estimate for the restoration company's estimate. So the contractor's interest, in my opinion, is a little bit different as well. What can the contractor do? Contractor can approach a homeowner offering reconstruction services. They can offer an opinion to a policyholder whether the damage is from wind or other incident normally covered by a policy. They compare an estimate. They can discuss that estimate with the customer, and they can recommend that the policyholder file a claim. Be present when the insuree is there for an inspection if the contractor wants to say, yes, this is the damage relating to my estimate. And that's about it. Once you start advocating, you're outside the realm of acting like a contractor and now more like a public adjuster. But so what can't a contractor do? Investigate, appraise, evaluate, give advice, advocate on behalf of the insured, prepare the insurance claim for the customer, offer to review the insurance policy, advise the customer about the insurance policy coverages, or of course, advertise on any kind of websites or any written material that they are some type of claim specialist or claim analyst to make them seem like they are a public adjuster or not just a contractor. Okay, so we doing good? No questions so far? You're muted, so I can't hear.
None so far. So just trying to find my mute button here.
Okay.
Yeah, nothing yet.
All right,
Thanks. Good job.
Yes, I'm just checking on our time real quick. So the the key things you really must know going forward. And this is and now I'm talking, this is, I think everybody, like, the bells go off when we hear restoration, remediation. Either the estimates from ours are drastically different, or in the scenario where we get to the site and it's already ripped to the studs.
We do have a question, Matt.
Fire away.
Can a contractor advise an insured to demand an appraisal?
He should not be doing that, because that is acting like a public adjuster giving claim guidance. Once you start giving claim guidance, you are acting like a public adjuster. I'll get that in a little bit with the assignment of benefits. I'm finding these, I have seen a lot of demands for appraisal. And sometimes it is coming from the contractor. That should not be an acceptable function or role of that contractor. I also, if I have a scenario, and let's go back to roofing claims because that's an easy one. If someone says the insured demands appraisal on the roof, they say we need a whole brand new roof, and you say, no, we have a little section over in this corner that can be repaired for $750, and they demand appraisal, my answer typically is yes, we will go to appraisal, but only with respect to the small damage that we acknowledge is covered and is related to a covered cause of loss. We don't believe you need a whole brand new roof, and we don't think the other damage is related to the roof is related to the covered cause of loss. That is a coverage issue. And in New Jersey, not Pennsylvania, I know some of you have Pennsylvania losses, and Pennsylvania is not as friendly with this. Coverage issues do not have to go to appraisal. Okay, so I answered the question. I gave a little bit more, so I hope that helps. So cooperation provisions and implications. So this is an interesting thing. What I often hear from contractors, restoration companies, public adjusters, anybody on the insured side of the claim is, well, your policy tells us to protect from further damage. That's what we did. You know, and then sorry you didn't have a chance to see it. And sorry we ripped out the entire first floor to the studs for a water leak in the refrigerator. But you know, we're supposed to protect the property, so we're just doing what we're supposed to do, competing with the obligation to have the property available for inspection. So there's obviously with the cooperation provisions, there's some competing things in there, and that's why my suggestion is that if you you have the ability to get out there as soon as possible. And that way, it's my understanding mold grows 48 hours or so, starts growing. That's the big thing, mold. I stopped the mold problem. And often what happens is the mold really doesn't start until about 48 hours. And that's even in the hot summer months. So that shouldn't necessarily be an opportunity for that contractor, restoration company, remediation company to get in there and start tearing things out without you having an opportunity to go and inspect. There's a case that I'm going to talk about the case in a few minutes. So because it's later on the slides. The Unfair Claims Sale Practices Act, I just mentioned that obviously too, because although we're talking about aggressively handling what we think are suspicious or possibly fraudulent claims, just be cognizant of your unfair claims and sale practice requirements, your delay notices, all of your obligations to advise insureds of policy provisions to basically make the claims process as easy as possible for them. So just that's where we're aggressively trying to fight off what has been a huge trend lately. We got to be mindful of our unfair claims and sale practice policy requirements. Let's get into a little bit of case law here. Delayed reporting. This is the delayed reporting we're going to talk about. All right, so delayed reporting, you know, obviously reporting timely is a very, very important aspect of the contractual obligations of the insured when it comes to their ability to inspect the property. The longer it takes, obviously, the higher likelihood that the necessary repairs protect the property may impact the company's ability to properly investigate. I don't want you to go reservation of rights happy, but as soon as you think that there is a potential problem when it deals with your ability to inspect that property, a reservation of rights might be the best option. You know, one case, it's out of state, but it gives some real good guidance. Excuse me. There's a case out of state, but it gives some real good guidance, and it's out of the Midwest. It involves State Farm, and it actually said, I mean, this what it was is the adjuster at State Farm kind of had his eyes on this specific remediation contractor, had an issue with the contractor in the past. So basically, what he said as soon as he saw this contractor on, he said, "Don't tear out. Don't take any sheetrock out. You know, you can do some very quick water mitigation. You can put some dryers in there, but that's it. And I'll be out there in 2 days to take a look at it." This was confirmed, not just it wasn't a verbal phone call. This was confirmed in writing, and when the State Farm adjuster actually got out there, as anticipated or expected, everything's stripped down to the studs. The court in that case said that State Farm did a very good job of explaining what can and can't be done. They put it in writing, and there couldn't be any confusion, because obviously what insureds or anybody else will say is, I don't understand the insurance policy. I was just doing what my contractor told me to do, but thought it was best. So I didn't have mold. And I've got a kid who has asthma and is susceptible to mold. So I really need to make sure that I follow that contractor's advice. So that State Farm case gives some real good guidance as when you start giving specific instructions and they deviate from those and they don't give you an opportunity to probably scope the loss, that is a potential problem. Okay. And in that case, they made a determination that State Farm did not owe coverage. Like, I think State Farm went out writing an estimate for like 30,000 compared to 90,000. And the court found that they were prejudiced and basically paid the $30,000, not the $9,000 claim that was submitted from the restoration company and the contractors. Typically, we're talking about delayed reporting still here. This is, the standard we've seen it typically is, you'll see in bold I have here, appreciable prejudice. Okay, those on here who handle liability files know that verbiage well, because we have obviously on the liability section of policy, we've got conditions and requirements to tender suits to us, not to make settlements without our consent and things of that nature. And there's been some cases that have come along and they talked about, well, what's late notice of a lawsuit or claim? And the courts really said it can't be just, you saw the person fall, you didn't report it, suit was filed a year later, and now you report it. That's not because it really didn't prejudice you. We might disagree with that analysis, but actually that's what they say. It has to be appreciable prejudice. So it has to really put you 100% behind the eight ball. It's kind of the same analysis with first party claims. You have to be prejudiced by what the insurer did. If the insurer didn't fill out a proof of loss, are you prejudiced by that? You can look at all the conditions in the policy, right? We've got all these duties to cooperate, in event of a loss, what they have to do. Are you prejudiced based upon the failure to comply with those policy provisions? So in a scenario where the scope of a loss may be significant, complying with the ability for you to go out and inspect that property and actually assess the scene, what it looked like at the time of loss, not when everything else was ripped out, that I would suggest to you is appreciable prejudice, because you cannot properly adjust that loss.
We have another question.
Yes.
As stated earlier, in today's world with advancement in communication methods and estimating technology, should or can a carrier demand a written estimate before any mitigation work is initiated?
So what I'm not sure you can. I guess the first question is the timeline. Is this mitigation being done within 48 hours, or is it be done within 7 days? Within 48 hours, it's be difficult to demand an estimate. What I've seen some companies do is they try to get someone out there ASAP, and they give them a max for immediate restoration. They'll say, okay, I saw that 7,500. That's the max we're going to allocate to this emergency restoration. That's in a perfect world. And I know we always can't get someone out there within 24 or 48 hours. But to ask for a written estimate before the work is done for emergency work, that's going to be a tough sell. But if you're talking about other work, don't forget, we have licensed contractors. Licensed contractors are subject to the Consumer Fraud Act and a whole bunch of other regulations and statutes. A contractor can't, rebuild this person's front house without having a contract, having it signed, having all the explanation of the work to be done and everything else. But on emergency restoration, I think they'll be hard pressed to compel them to put an estimate together before then. Any other questions, or we're good right now?
Good for now.
Kind of touched upon that. So again, we're talking about cooperation. That's one of the keys we're talking about when we're dealing with the insured. And we always talk about cooperation with the insured, but now when we start getting restoration companies involved, or remediation companies involved, or mitigation companies involved, we really have to make sure that there is even more cooperation. What do they have to do? Do they have to submit for an examination or oath and produce documents? What exactly was said between you and the restoration company and us? Why did you move in the fashion you went forward? Now, I'm not saying every time you have a high invoice, you want to take the case to an EUO, that might be cost prohibitive. But consider all of your opportunities under the policy to get all the answers to all the questions that you really need to figure out whether or not this is a legitimate claim, an exaggerated claim, or anywhere in between. Longobardi versus Chubb is a great case because Longobardi versus Chubb, which I'll talk about in a few more minutes also, talks about material misrepresentations. So if at any point in time, and Rich talked before about the Insurance Fraud Prevention Act, and that's in the presentation of a claim, and that's a great hammer to have because if they got a $50,000 outstanding invoice, they might say, "What do I got to lose? I'll file a suit for $50,000." If you file a counterclaim for a violation of the Insurance Fraud Prevention Act, they got something to lose at this point in time. So that provides quite a bit of nice little backhand, let's put it that way, back towards the plaintiff / restoration company that you can hopefully utilize that. So Longobardi talks about material misrepresentation of the claim. So also you want to analyze whether or not at any point in time is the insured, as Rich mentioned before, most often we find the insureds are kind of just caught by surprise. But if you think the insured may be in on something, or might be trying to pull one over on you, if they make a material misrepresentation with respect to any aspect of the claim, it's potential for barring the entire claim. So Longobardi is a really important case. New Jersey Automobile Insured, what is it? NJFI, New Jersey Automobile Uninsured Association, yes, versus JALA. That's just general cooperation terms. That just says the policy is valid, the cooperation terms are there for a reason, and you have to comply with them. DeFrancisco versus Chubb is another one that talks about cooperation. This one talks more about tax returns. And the court basically says if there's any financial issue that we're trying to evaluate or determine your salary or determine how you can afford something, tax returns are perfectly acceptable to be produced, especially in the examination or oath process. And obviously, if there's lack of cooperation, that could be a basis to deny the entire claim. But remember, again, we're going to have lack of cooperation. We have to show that it really impacted our investigation, that lack of cooperation. So Longobardi, because whenever you talk about fraud or suspicious claims, Longobardi is the case we talk about. And basically what happened in Longobardi is there's a gentleman, Mr. Longobardi. He insured Hummel figurines with Chubb. He had an alleged theft. And then he made a claim for jewelry and these Hummel figurines as well. During the investigation process, there was a lot of questions to him about these Hummel figurines because Chubb actually had gotten hit with a couple of fraudulent staged Hummel figurine claims, specifically involving two guys. One would write up the appraisal report overvaluing the Hummel figurines, and the other guy would allegedly stage this burglary. During the investigation, they said, "Do you know?" And I forget the name of Tom Stankos, I think it was. And he said, "No." And they asked another person who did the appraisal, "Do you know him?" "No." As litigation ensued, as it turns out, Mr. Longobardi taught at the same school at Mr. Stamkos. And as it turned out, he did know him. And as it turned out, he also got an appraisal from the other gentleman, and he knew him as well. So the court in that case actually sent it to the jury. It was a jury question. The jury said that he made material misrepresentation in the presentation of his claim because he denied knowledge of these other two individuals. Okay. The key point in this case, though, too, is the jury is asking question number one: was this a legitimate burglary, theft, covered claim? They said yes. Okay. They didn't think he was part of the big scheme, but they said no because he made a material misrepresentation which voided coverage and voided the policy. So always be careful for those material misrepresentations in the presentation of a claim. I always say, and there's some case law out there, that could be even during litigation. So the more misrepresentations you get, the better you are. And the other thought process is you might be able to bar the entire claim, not just the building claim or the ALE claim or the contents claim. You have the potential to potentially bar every aspect of the claim. How are we doing on time there, Rich?
We have about 10 minutes.
It's okay, good. So I want to read, before I get into the assignment of benefits, in prepping for today, and getting some of this case law. I mean, a lot of the assignment of benefits cases come out of Florida. Shock, as I said before, that's where I think we've wound up with some of the problems we have now in New Jersey. And they talk about them kind of being, for the most part, enforceable assignment of benefits. Okay, but I think it's interesting. Now I got to put my reading glasses on. All right, don't look on pictures. So this is what the Insurance Information Institute says. In Florida, abuse of assignment of benefits contracts has fueled an insurance crisis. The state's legal environment has encouraged vendors and their attorneys to solicit unwanted assignment of benefits from tens of thousands of Floridians, conduct unnecessary and unnecessarily expensive work, and file tens of thousands of lawsuits against insurance companies that deny or dispute the claims. The mini industry has cost consumers billions of dollars as they are forced to pay higher premiums to cover needless repairs and excessive legal fees. And consumers often do not even know that their claims are driving these cost increase. The abuse, therefore, acts somewhat like a hidden tax on consumers, helping to increase what are already some of the highest insurance premiums in the country. So that's like, that's in a published case right there. Okay, so that tells you the problem we're dealing with when we have these assignment benefits and the restoration companies, and the claims and the lawsuits. So I often get the question, is an assignment valid? Okay, and our insurance policy says you cannot assign this policy. Everyone's probably familiar with that provision. The case law is very clear. Before a loss, you cannot assign a policy. Okay, after a loss, the loss has vested and an assignment is permissible. Okay, that's New Jersey case. That's the case across the entire country. Okay, what aspects of the claim are assignable? Potentially all aspects of the claim, or just little aspects of the claim. Like you could have 4 contractors. You could say, okay, assignment here, assignment here, assignment here. Okay, so it's important to understand that those assignment of benefits are potentially enforceable. But the problem, and some things I've been seeing, is the assignment of benefits, they're like a contract, like, 17 pages long, and they have all kinds of different verbiage, and the insureds don't understand what's going on, and they're just signing it because this person knocked on their door and told them they're going to put money in their pocket. So you have to also look at what those assignment of benefits look like, because some of those assignment of benefits can be attacked as being legitimate assignment of benefits. So I put up the 3 cases here that talk about being valid. And basically they go back to plain old contractual law from like the 1800s that says anybody can assign, once the contract vests or the loss vests, anybody can assign a right. Okay, and everyone's heard the word step into the shoes. So they step into the shoes. Where that gets tricky now, though, is if I'm dealing with an assignment, do I still get to talk to my insured? If I'm dealing with an assignment, who do I make the check payable to? If I'm dealing with an assignment, can I demand the contractor show up for an EUO? Because, live by the assignment, die by the assignment. You can't just say, I'm taking the assignment, but I don't want all the bad stuff that comes with it. If he's taking an assignment, then you have the potential to ask him for all the obligations under the insurance policy, for cooperation, for documentation, and things of that nature. So it's important to look at that assignment and see if that assignment is valid, the scope of it, and what's going on. The only time I've seen real true courts invalidating assignments was when the assignment was it was basically a contractor acting like a public adjuster, and they said, since you're trying to act like a public adjuster, the entire assignment is void. And that's going to be that might be a small portion of your claim, so I wouldn't hang my hat on that. So being cognizant of assignment of claims and how to handle them is a growing thing, as we saw in Florida, where this all started. It's the Department of Banking has said it's a problem. It's causing billions of dollars. It's essentially an additional tax, significantly. And maybe anybody on this call who has any pull with any of our local legislatures, Florida. Well, first there was one carrier was very smart. In 2018, they tried to put an endorsement, and they wanted to make the anti-assignment clause they have in the policy also apply to post-loss assignments. And the Department of Banking and Insurance said no, they were not going to allow them to do that. So there's a written decision saying Florida Office of Insurance Regulation denied them, and they appealed it, and the court says, Dopey was correct there. However, in 2022, December 16th, 2022, Florida. So this is what we need our local legislators to follow. We need them to get a copy of this and say, oh, that's good. That's going to save our taxpayers money and their insurance premiums from going higher. And this is a regulation that talks about assignments and assignments of benefits. It actually says what they can and they can't include. It must be executed in writing. And it must say, contain a provision requiring the assignee to provide a copy of the executed agreement assignment to the insurance carrier within 3 business days. Contain a written itemized per unit cost estimate of the services. Relate only to the work he performed by the assignee for service to protect. Contain a provision that allows assignor to rescind the assignment agreement without penalty or fee by submitting a written notice of rescission signed by the assignor to the assignee within 14 days. Okay. So that's what Florida has been doing to address this problem. I think if we had some legislation or something going on in New Jersey and the surrounding states, that would give us a lot more teeth, because what this does is it kind of creates a cooling off period, as I call it. I say the same thing with plaintiffs' attorneys and getting car accident reports. We've always been looking for getting a cooling off so that basically you can avoid runners and all that other kind of bad stuff. But this is like a cooling off on first party claims. They don't want these. They recognize the contractors might be the bigger problem than the public adjusters. And as a result, they are requiring the contractors to have contracts that say certain things, do certain things, and have a cooling off period whereby that insured has the ability to say, no, you know what? I woke up, I saw what you're doing. I'm on to you. I'm out. Okay. So that's a real big thing. Again, like I said, I'm not sure who on this call would have a little bit of juice to perhaps get things moving in Trenton on something like that. But, I think for us, insurance premiums have gone up. I think everyone's seen the letters from other insurance companies. And I think one of the biggest correlations between insurance premiums increase, I'm not an actuary and I don't have this information, but my best guess is that it is the increase in property claims and a lot of these types of scenarios. How are we doing on time now?
2 minutes.
3 minutes.
All right, so we're doing pretty good. All right, let me see if there's any more excerpt read. Okay. Let's leave the last 3 minutes, I guess, for questions then. So, any other questions everybody has?
I don't see any in the chat. Does anybody have one they want to ask? Jan, did you have a question?
No, I'm good. I think this was outstanding, Matt and Rich. This was an excellent presentation, really. And I am sure all those listening really appreciated hearing all this, and they're probably really scared now.
Well, no, so there's some companies I know who they've heard this from me. We're actively dealing with problem individuals. We were actively trying to head them off at the pass. Like Rich was talking about his case study, that for a carrier, they were able to successfully go after this bad contractor. And, if this guy is not doing it to this carrier anymore, but he's probably doing it to someone else. So it's being aware of these things. So I'm not to scare you, but I know a lot of you on this call are aware of these concerns and issues going on. And I guess if you aren't, it's just something to keep an eye on, because I know some of these roofing claims, restoration bills are driving up the cost. When you have a roof claim where you adjust it as a small replacement of a couple thousand versus a $50,000 new roof, as well as a restoration work for a few $1,000s compared to $50,000. So I know it's really hitting the bottom line.
Yeah, just to say thank you from MSO for you doing this. I think one thing that you really bring up is that people need to speak up. The carriers and the insureds to sort of fight a lot of this, I'll call it bad behavior,
Right.
for sure. But this was excellent, and what a great topic. And No, we really appreciate you two giving your time and talent to this group, and it's much appreciated. Sue, do you want to do a close?
Well, I would just, I
Yes,
would,
sure.
I will, before you do that, sorry, Sue.
Go
I
ahead.
would, I think I'm familiar with a bunch of people that are on this call. So most of you have my contact for information and Rich's contact information. So if there's anything that you had a question and didn't ask or something comes up, feel free to reach out for us and we can talk through some of these issues as they come across your desk.
Sue, you're going to speak about this is recorded and available, and
Yes,
so
this is right. This is as Jen just mentioned, these are recorded. They will be available on our website and on our YouTube channel. And our next webinar is coming up is Ivo Raguzzi from Optima will talk to us about fraud on April 16th. This course will be available for CEs in several states. Diana Duke from New England Excess Exchange will speak on flood on May 23rd. This may also be a CE program. Nils Deacon from MSO has a presentation on houses of worship in June. Omnia's next presentation in September will be on soft skills. Ohio Insurance Institute will provide an overview of current legal trends in the fall, and MSO will offer an update on trends in the BOP. As mentioned, the Ed Seminar will be held virtually on November 12th and 13th. And contact us if you have suggestions for future topics and presenters. We certainly appreciate Matt and Rich for your presentation today and the great topics and great questions. We also like to thank our sponsors, which I tried to put on the screen, didn't do too great a job of it. But thank you, Matt and Rich, and thank you everyone for attending. And thank you to our team who makes this all possible. Have a great rest of your day.
Enjoy the long weekend. It's right around the corner, everyone.
Yes, it is.
thank you.
Bye.
Bye.